Well, good morning, everybody. By my clock, that is 10 o'clock. So we will we'll crack on with this morning's webinar. I think there might be a few more to join on, but we'll just get going in the interest of time. Good morning. My name is Sandy Kirkpatrick, and I'm one of the account managers here at the Chamber of Commerce. I predominantly cover Oxford, Slough, and a bit of Buckinghamshire as well. Firstly, I'd like to thank everyone for taking the time this morning to come on this webinar. It's going to be a fantastic topic that we're covering. And on that vein, I'd like to introduce Gareth Anderson, who is HSBC's Area Director for the Thames Valley and for Hertfordshire. HSBC are one of our good long-standing members, and it's fantastic to have them on this morning covering such a poignant topic that I'm sure is relevant to so many businesses within membership and throughout the Thames Valley. I'll let Gareth introduce himself. He'll probably do a much better job than me. But without further ado, I'll hand over to you, Gareth.
Thanks, Sandy. Appreciate it. I don't think I can do a better job of introducing myself, actually. But morning, everyone. It's a pleasure to join you this morning. So Sandy says I'm the area director for Thames Valley and Hertfordshire, and what that means in essence is I get the privilege to every single day talk to SMEs about the opportunities, the challenges, their plans, their strategies. And this year has, more than any year, been one of the most fascinating for those conversations, for all the obvious reasons that we'll go into. So what I thought I'd do today is really give some insight into where have we come from, where are we heading, and what can we do to help ourselves through this journey. The last year has been an incredibly challenging one for so many businesses, so many people, and continues to be so now. There are signs that the recovery is underway, but it is tentative baby steps, and we are in the early stages of the journey. So I speak a little bit to our clients about what has happened, and I make no apologies for the fact that the colours, the numbers, the stats on this slide are quite stark. The big thing here for me is that over 2.6 million people have now lost their lives to COVID. And if we go back to December 2019, when there was a province in China, Wuhan, or Hubei province, sorry, of 66 million people that was going into a lockdown, I don't think any of us would have ever imagined in our wildest imaginations that we would be in that position less than 6 months later. I don't think any of us envisaged here when Italy went into a national lockdown in late February, early March, the UK would be in this position. I still remember getting on the train going into Canary Wharf, and we were starting to talk then about, should my team be working on a rotation basis, 2 weeks in, 2 weeks off. And then, of course, a week later, we went into the first of the national lockdowns. And what has that meant? Well, in its simplest terms, it has meant huge economic upheaval. And it has meant for so many of our clients and so many businesses across the country, they fought to survive, and they fought to try and maintain some form of business continuity against a backdrop of a situation that was changing on a daily basis. For me, it was never a binary choice between lives and the economy or lives and livelihoods. It was always a case that what we had to do for all the reasons that we know about. What's absolutely crucial now is the approach that we take towards the recovery. So, without wishing to frighten people around what's going to happen to UK GDP, we know that it declined 10% last year. We expect there to be a bump this year of 4%. and we expect next year to be as much as 7.7% growth. That all leads to the idea that by the end of 2022, we could be back to pre-pandemic levels. But, you know, I don't know about all of you. If I looked at that budget, there was a very clear and obvious message in there. It was, you know, we must spend now, but there will be a price to pay later. And so whether you think the 130% super allowance will act as a catalyst for growth, or whether you worry that in doing so you will only see those increased profits taxed away, the fact is that the government is trying to do all it can, and indeed national governments are, to stimulate demand, to stimulate growth. The confident person in me says that we've now got 20 million people in the UK vaccinated, 300 million people globally have been. So that huge vaccination effort is going to lead to what I hope will be increased confidence. There is a huge amount of pent-up consumer demand. And every business that I speak to, even the ones that are closed at the moment, still talks about wanting to be optimistic, wanting to look to the future with confidence, and wanting the support to grow. So all of those things suggest that, you know, as we come out of lockdowns, so long as we act with the care and caution that we need to, we will see an economic improvement, and quite a quick one. The deficit numbers for the UK, I mean, you know, it's quite scary when you think we're going to hit 355 billion this year. That's 17% of our GDP. The national debt now sits at almost 100% of our GDP. We haven't seen those levels since wartime. Now, there's a huge debate going on about, you know, do we need to focus on repaying the debt now? Is it the right time? Do we even need to repay the debt when interest rates are as low as they are? What's going to happen to inflation? What will that mean for investment? And I haven't even got to the B word yet, which is amazing considering I think this is the first time I've got 3 minutes into something and not mentioned Brexit. But that's a consideration for so many of our clients, and so many businesses we talk to are asking questions around, well, as we come out of the pandemic, what is this going to mean? We've seen the commerce data from Germany, Italy, and France, and we know that there has been a reduction in trade flows. How much we put that down to COVID, how much we put it down to bedding in post the UK leaving, is all at the moment up for debate. Although what is pretty clear is that we will see a reduction in trade flows. All of these things are on the mind of all of the clients that I speak to. And sometimes it's so difficult to navigate your way through the noise, to think about what you can do to influence and control your agenda. And that's what I'm going to touch upon later on. So how do you navigate through uncertainty? And what are the things, the practical things that you can do as a business owner to help manage your cash flow through a crisis and indeed through a recovery? I will touch briefly upon this slide, just purely for the fact that the person that made these for me was so proud of themselves when they actually managed to Photoshop a COVID virus in, which was quite scary. But we've got to remember that there was already an awful lot going on economically, politically, pre-COVID. And what COVID has done is served as a magnifier and brought so many of these headwinds into much sharper focus. We already had stagnating European growth. Indeed, one of the reasons why Brexit has become such a debate for so long is that we look to Europe post the financial crisis with a real sense of, well, actually, has this project worked? Because, you know, they were grappling with the Greek crisis. They were really struggling with Southern European states, and there was huge debate as to whether or not the Western European states, i.e. read Germany, were paying for the Southern ones. Could you have a monetary union without fiscal union? All of these things were debates that were being had. And of course, what we were seeing was stagnating European growth. Mr. Trump had, prior to COVID, embarked upon his upending of the global world order and was engaged in trade wars with China, and the tit for tat spat that span a number of years is yet to be resolved. Indication suggests that Biden is not going to be reversing a lot of the policies put in place by Trump. But, you know, if you saw in the press today, there will be discussions taking place over the coming weeks. So it'll be very interesting to see what happens there. And of course, you know, we had the rise of populism and nationalism, all of these things which factored into a much more challenging environment. And as I say, you know, COVID came along and acted as a real catalyst and magnifying effect to so much of this. So where are we heading towards? Well, there's three principal mega trends right now, if we can call them that are influencing the way we all think about the world. And for the next 30, 40, 50 years, it is these three things, so aging populations, digitization, and decarbonization, that are going to have more of a bearing over any decision any government makes, any business owner makes, than anything else. So you start with aging populations. At the moment, 1 in 11 people globally are over the age of 65. By 2050, that will be 1 in 6 people. And that number will be 1 in 4 in some Western European countries, which is absolutely staggering. So for every 1 person being born right now in Western Europe, 10 are being born in sub-Saharan Africa. So the challenge for Western European countries, for China, for the US, is how do you deal with what is going to be an expanding welfare state? How do you deal with more people that will be living for longer, will need care for longer? And crucially, what happens to the productivity of the workforce if a significant percentage of it is retiring over the next 30 years? It's pretty obvious to see where growth is going to come from if you follow population ages, and it's that sub-Saharan Africa and Southeast Asia are going to play a much bigger role in the world order than they do currently today. The second is decarbonization. You know, this was often talked about, but it is now becoming so much more brought into focus and is on boards' agendas across the world. The simple fact is that our planet is being destroyed by our activities. And unless we are going to make some serious changes to our carbon footprint, we aren't going to meet the targets that are set by the Paris Climate Change Agreement. And so, you know, there is a huge effort that is needed to ensure that we can transition to a carbon neutral economy. And you'll see in all governments' manifestos, budgets, plans at the moment, decarbonisation and moving to a sustainable energy economy is featuring more and more. More and more businesses that I talk to are talking about ways in which they can not only support the decarbonisation agenda, but also can use it as a strategic USP to support their growth. There's a huge amount of investment going into this area, and that will only continue. And the third is digitization, which is, I suppose, pretty obvious given what we've been through. There are 7 times as many connected devices in the world than there are people. And if you think we've got, what, 7-something billion people on the planet, there are 7 times more connected devices. That's only happened in the last 10 years, which, you know, is absolutely staggering. One of my favorite stats that I always think about is that back in 1964, a terabyte of data cost $2.3 billion, a terabyte of data. Today, a terabyte of data on the cloud costs less than $30. So this is only going one way. And what are the factors that are coming out of these 3 megatrends? Well, digital transformation is going to accelerate. That is an absolute given and has already happened. We were on this journey pre-COVID. It's just accelerated now. You know, how many of us are now much more comfortable ordering something online? And in fact, almost use that as our default for our shopping rather than going into a physical bricks and mortar store. How many of us have now become much more accustomed to doing all our banking online rather than face to face or going into a branch? This is scary. My 90-year-old grandfather now uses Facebook. He's 90 years old and he's on Facebook because that's now his new way of communicating with the world. It's quite terrifying watching him post memes, I must admit, and some of them are deeply troubling. But the point is that so many people who we thought perhaps might not have embraced technology and digitization prior to the pandemic have had to do so out of necessity. You think about cash, we will transition now much quicker to a cashless economy, purely because of the fact that more and more people are realizing that paying without cash is much more frictionless, is much easier, and arguably more hygienic. Workforces have been redefined, reskilled, and redeployed. Pretty much every business I talk to at the moment uses the phrase, "we've all had to muck in." And what they've meant by this is that whereas previously they might have had very clear demarcation lines around roles and responsibilities, who did what and when, what the pandemic has meant is that workforces have had to be much more flexible and adaptable. And so, certainly in my situation in the last year, I think I've been involved in more projects not related to what I do day in, day out, been involved in more initiatives than I've ever been involved in. Why? Because more and more people now are being redeployed to deal with the challenges that have been wrought by the pandemic. Consumer behavior has changed. I mean, it's a pretty obvious one. The way we consume, the way we transact, the way we interact has all changed. In March last year, 50% of the UK workforce was working from home and using Zoom as their primary means of communication. And Zoom has become in itself a word. I'm going to Zoom somebody. We would never have had that a year ago. Will we go back to some of the things pre-pandemic? Yes, we will. I'm a great believer that people won't suddenly stop wanting to interact in pubs, and I absolutely believe that the hospitality and leisure sector will rebound. But fundamentally, consumer behavior has structurally shifted. And for any business owner, bearing that in mind, taking into account when making strategic decisions will be really important. Modern supply chains have been, I think, in some respects exposed for their fragility. We have a really interesting, alarming challenge at the moment, which is around the supply and demand economics of containers. Back in January, early January, a container from Shanghai to San Francisco would have cost around about $4,000. Today, it's costing $9,000 plus. There are companies in China that are making these things at a rate of knots because there's a clear demand shortage and a profit opportunity. But for so many of the clients that I speak to, this has come at a really challenging time when they're seeking to recover, they're seeking to deal with the uncertainties, and they're seeing their costs rise, perhaps more than they would have anticipated. I think the price of oil hit over $70 yesterday and is continuing to rise. All of these things will factor into the equation over the next 6 months when governments come to make decisions about interest rates to control inflation. So what are the four things that we talk to clients about today, given the circumstances? So the first is thinking about cash flow now. And it goes without saying that the most important thing any business can do right now is take a hands-on approach to their working capital cycle. So your debtors, your creditors, and your stock. I am really cognizant of the fact that me talking about cash flow now seems quite trite, where for so many businesses, cash flow now is non-existent because revenues just aren't coming in. But what is important to remember is that you were a viable business going into the pandemic, generating revenues, bringing in cash flows. So whilst you might be reliant on the life support mechanics brought by furlough, extensions to paying tax and so forth, those mechanics will fall away. And the question then is, when they do, and we reach a steady state again, what does your cash flow look like? Who are your debtors that will come back or won't come back, and why? Are you comfortable with your suppliers? We've had many businesses recently that have found themselves opening back up, certainly since the first lockdown, and finding that their most loyal and trusted suppliers didn't exist, and that hadn't been factored into their planning. Most important thing when thinking about cash flow is, what are my customers and suppliers feeling? Do you know what's really going on with their businesses? What does their cash flow situation look like? Are you seeing pressure from them in terms of the time in which your customers are paying you, or the time in which your suppliers are demanding payment? And it's obvious, it's one of the most clear warning signs. We have seen so many businesses recently with debtors that have been pushed into the 90 and 120 day column, and which is evident of the fact that there is still very clear pressure. Things are improving, but just taking a step back and saying, what does my cash flow look like now? And crucially, if I was to open back up, what would it look like on day one? I have a real concern about the summer months as businesses start to reopen. There is a real challenge that for many, they have CBILS lending or bounce back loans. They will have deferred the tax bill. They will start to bring people back from furlough, albeit the scheme's now been extended to the end of September, so it'll be more gradual. But all of this will come at a time when a business owner is grappling with growing the revenues again. And one of the big things we're talking to our clients is around the importance of the next point, which is scenario planning. So this is the what if question. And when you're in the midst of survival, asking yourself what if is a really difficult thing to do. But what we're trying to do with all of the businesses that we talk to is to say, okay, think about what might happen and what that could mean for your business. And I use a really simple acronym here for this, which I'm going to copyright one day, which is IQ MISTER. So it's identify what those risks might be, quantify them. So think about the financial impact, the operational impact, the impact on people. Put in place sensible mitigants to allow you to respond to the normal course of business. We as bankers don't like uncertainty. Uncertainty really scares us because uncertainty is something that we can't control. So what we're forever trying to do is turn uncertainty into risk, because if we can turn uncertainty into risk, we can manage it. And the way we do that is by looking at scenarios. One of the most important things a business owner can be doing right now is asking that what if question, putting in place a plan for each possible scenario. Most of the scenarios that you plan for won't emerge. You will have all these great plans and you may not have to actually utilize them or pull on the levers that you put in place. But if they do, you at least know that you've got the ability to respond quickly based on that. It doesn't matter whether you're an SME or a large corporate. Planning for scenarios and wargaming, if you like, is going to be so important as we come through the recovery. The third point, really thinking about how you create a flexible platform. All the points I discussed earlier around, the way we consume and transact and interact has changed. We're also looking at, skills within our workforce. One of the things that HSBC is really focused on at the moment is how do we equip our staff with skills for the future, not just skills for today. And that means that I found myself recently on courses around artificial intelligence, blockchain technology, all things that are geared up towards what is likely to be the direction of the travel in the future. For all businesses, thinking about your staff, what they currently are and where you want them to be based upon your strategy is really important. We've underinvested in the UK in our people. We've underinvested in skills, and that needs to change. And it will start with each business owner, whether large corporate or SME, really starting to think about what the future could look like. And that links to the next point about technology and automation. What's been really clear to us is that every business that we have worked with that embraced digitization pre-pandemic, that looked at ways in which they could automate processes or embrace new technologies to support better customer journeys and outcomes, have tended to do much better than those that haven't. Why? Because technology doesn't just mean a reduction in costs or an improvement in efficiencies. It also means increases in agility and adaptability. Businesses that have put their technology on the cloud have adapted better to businesses that haven't. So it might be very difficult at this time when locked in survival and continuity mindset, but to start to think about, well, how do I create a platform within my business that allows me to flex and adapt will be really important. And then finally, the vision for the future. Truthfully, this is probably the most difficult thing. And we talk to so many of our clients who have a plan for the next month and are very good at doing the doing because it's what they've always done. And actually you say, what's your vision? Well, my vision is just to be able to take out more money at the end of the year. And that's fine. But actually, when you start to break it down, where am I now? Where do I want to get to and how can I get there? It really does sharpen the mind. And this is what we're going to need to be doing, within the new world that we're operating in, with all the challenges that we have, visualizing that the future and planning for what you want to do is going to be so, so important. So there's sort of three things then that we focus on when we think about strategies for managing cash flow. And we put them into the buckets of short-term, medium and long-term actions. Within short-term, I mean, it's probably the most obvious, and I'm sure every business owner has been grappling with this. It's identifying revenues at risk. So there'll be the obvious things where you will have customers that right now aren't paying you. You will have businesses that are telling you they are struggling. Sometimes what we found is that the ones that haven't been telling you that they're struggling are the ones that actually turn out to create the worst problem for you. And so having that understanding and close relationship with your customers, I mean, it's obvious, but it's so important. What are your revenues at risk and why? And what can you do to mitigate against them? We've had lots of businesses and plenty of anecdotal stories about clients that have been overexposed to a particular debtor or concentrated in particular areas, and because of a lack of diversification have found themselves very quickly exposed from a cash perspective when one stops paying on time, or from an overall revenues perspective when one goes under. And so the worst thing anybody can do is not have that plan in place. Some of our clients have been talking about how they've been reducing exposure to certain customers, removing credit limits, starting to tighten their payment terms, all sensible ways in which ensuring that where you have revenues at risk, you're putting in place sensible mitigants. We're talking to a lot more clients about insuring their debtors now. And the government was very keen to ensure that insurers didn't suddenly start pulling limits, so it put a government backing behind insurance companies, which still stands today. And the idea being is that if you're trying to grow or you have concerns about your debtor book, you can still go to a Euler Hermes, or you can still go to an Atradius and get cover to give you some of those risk mitigations. Stopping discretionary spending. This is the first thing that every business we spoke to did. And it's a really interesting story. One of my clients said to me, we used to spend thousands and thousands of pounds each year, £2,000 it was, on pens. And he said people in the office were forever losing pens. And we stopped buying pens. And he said what very quickly became apparent is that we had so much discretionary spending that was going on throughout the business that wasn't controlled. And the pens became almost the symbol of the need for them to start to think about their discretionary spending. What's become apparent for a lot of businesses is that actually that discretionary spending wasn't really serving a clear and defined need or generating sensible returns. And so as it's gone, it actually hasn't impacted the business. But it's very easy to say, well, I need to keep marketing going. And of course, to an extent, that's absolutely true. Or, I need to ensure that I still have the ability to travel, to entertain. And the simple thing here is to ask yourself the question, is it necessary? Can I, in good times, bring it back? Do I really need it? Revisit variable costs. Lots of businesses we talked to have said they've looked at ways to reposition fixed cost to variable cost to give themselves a little bit more flexibility and adaptability. We've had businesses selling assets to free up cash. We've had businesses that have sought to leave leased premises to work in more flexible spaces. We've had businesses that have closed and shut down their offices altogether because they've now realized that actually their staff are much more efficient, productive and happy working from home. So there's no one size fits all, but having a clear indication of what your variable costs are and how you can influence them, whether again they're necessary, is really important. And part of this falls into the scenario planning piece. But again, these short-term actions, I'm convinced that every business owner has done and pulled on these levers at some point. But the point here is that, yes, whilst they might be short-term actions to support a crisis, they should always be happening within the business and almost become part of its culture of operating. Thinking about the medium term, so I've touched upon this quite a bit, focusing on that working capital cycle management. How do you actually bring down the gap within your trade cycle? So if you put something on a ship to come over from China, and that's going to take 60 days, say, and then you're going to sell something on credit for 30 days, you've got potentially a 90-day funding gap. What are the ways in which you can reduce that sensibly from a cost perspective? And can you get the appropriate financing to support you doing that? We're having more conversations with clients now about working capital management than we had pre-pandemic, most certainly. And again, all of that links into scenario planning and forecasting, thinking about stock, creditors, debtors, and cash. In the medium term, again, protect valuable relationships. We have had lots of stories whereby businesses have said, well, actually, this customer is a very valuable one to me, and I am prepared to offer them better terms or a discount because they're valuable to my business and because the relationship is important. UK PLC is UK PLC, and so we're all in this together. And where businesses have had the ability to support the supply chain and to support relationships, they've done so. And again, this is part of really understanding your customers and suppliers. I've touched upon, creating efficiencies in the cash cycle, and I've also touched upon reviewing customers and suppliers. Take a step back and ask yourself, am I concentrated to a particular supplier? What is the risk if they tomorrow couldn't supply me? Am I concentrated to a particular country? We've had people get caught out with rules of origin recently. Particular example, is one of my clients who imports exotic fish from Southeast Asia, which then sits in its frozen in its warehouse in the UK before going out to Europe. 60%, give or take, of their sales went into places like France, Italy, Spain. Why? Because the UK aren't massive fish lovers. They've been stung quite badly with rules of origin, to such an extent the conversation now is it appropriate for us to close our factory to consider opening up a distribution hub in Amsterdam? Possibly. That's a quite extreme example, and I don't think that's endemic across the country, but it's happening. And I think the important thing here is to say, well, what does my supply chain look like, and am I comfortable with the risks within it, and do I have a plan to mitigate them if they emerge? The long-term vision. So I'll start with the top one: invest for growth. The super allowances, the 130% super allowance, which I find absolutely fascinating, effectively means that every business that is seeking to invest in capex could reduce their taxable profits by as much as 25% based on the level of investment they're making. That's important, but crucially, it's not about buying assets because the allowance is there to be taken advantage of. It's about the strategy of what buying the assets will mean for the business. And if it's going to make a genuine difference to profitability and long-term growth aspirations, absolutely. What we don't want people doing is buying assets that don't actually generate returns, don't provide for relatively short-term paybacks, and then the business find that actually when tax goes up, they're paying 25%, if indeed we end up going down that route, where they haven't actually been able to increase their profits. There's a lot of businesses at the moment, incidentally, that are loss-making, and so you'll be able to offset 3 years' worth of losses against taxable profits. So the argument goes that actually what the government has done is tax those businesses that have done very well pre-pandemic. Although if you talk to Amazon, they will make no comment, but they, I imagine, are quite pleased with the super allowance, which effectively means they won't pay tax for a few years. But thinking about that strategy of what growth means for you and where it's going to come from, linked into all the mega trends and changes in consumer behavior that I discussed, is really important. Be bold. So we've seen lots of our clients talking about implementing new revenue and pricing models. They might have diversified into new markets. They might have looked at new product lines, new innovations. They've actually reviewed the way in which they generated revenues and the way in which they priced things. We had a really interesting situation recently where we had a client who moved their entire business to being subscription-based. Previously, everything had been done on a flat fixed fee basis, and they looked at the way the market was changing. They looked at the way consumers were interacting with the content that they were producing, and they took a decision that actually they'd remove the revenues to subscription-based. They've grown 20% in the last 3 months as a result of doing this. So sometimes we feel as though we're locked in the things that we've always done. The answer sometimes lies in just being bold and thinking laterally. That particular business, as I say, is really growing now, and all it took was a different approach to the way in which people were paying for the content it was producing. Long-term sources of financing goes without saying. That's really important. CBILS and bounce back loans have distorted to an extent the conventional market for financing, and it's clear that we can't operate with every loan being provided in the UK being 80% backed by the government for too much longer. But there's no question about the purpose that they were there to serve, and they have done that. It'll be very interesting to see, as I say, what happens over the next 6 months, but that's beside the point. When you think about your long-term vision, the question to ask yourself is, what will I need to achieve that? And that's why having a conversation early with your bank, with your accountants, with any of your strategic partners is really important. Long-term financing needs to be planned out, well thought through, aligned to the different scenarios you're exploring. The worst thing for any bank is to get a surprise, good or bad. At the point in which finance is needed, it's usually too late, and the conversation becomes more of a challenging one. If you're planning what you're going to need, when you're going to need it and how, you will have much more positive conversations and potentially outcomes with banks and with financing partners. So I've touched upon a lot of these, but this really is the summation of all the points that I've discussed. So there's 5 things for any business right now to bear in mind and to be thinking about plans and strategies within each. Thinking about working capital and cash, we touched upon how do you reduce working capital, how can you revisit variable costs. Thinking about operations, well, contingency plans there, read scenario planning. Thinking about how you maintain operations and capacity if appropriate. Looking at your supply chain, diversification is really important. Diversification has always been the best strategy to effectively manage risk and uncertainty, and it remains that way. Think about your supply chain. What happens when there is an increase in demand? Many businesses are dealing, as I said, with the cost of containers rising because of the increase in demand, and that's impacting on ultimately their margins, their profitability. People, free people from internal structure, process and constraints. One of the big things that we're talking a lot about at the moment is how do we become less inward looking, more externally focused? How do we truly focus on our customers? What does that look like? What do we need to do? How do we remove ourselves from perhaps the silos and the processes that we've been focused on day in, day out? Think about how you can help your people to become multifunctional. The more you invest in them, equipping them with the skills of the future, the more likely they are to innovate, the more likely they are to support business growth, the more likely they are to stay with you. And finally, be bold. A question I ask every business owner that I talk to at the moment: can digital adoption make a difference to your business? And I get varying answers. Some tell me absolutely not, don't be so silly. Others tell me don't think so, have a long think about it, and then realize actually, to all the points I discussed earlier, the world has changed and digital adoption more than has its place within their business. Finally, is now the right time to consider a pivot. The worst thing that we can all do at the moment is stand still and hope that things will just magically change. We're in a great place compared to a lot of countries at the moment with the vaccination effort, with the reducing levels of infections. But what's clear is that if we come out of this and we continue to do the same things, it's probably going to be quite challenging. And finally, so just HSBC, well, how can we help? The obvious thing that I'd say is here, you're not alone. And that goes for not just HSBC, but I would hope any bank that you work with. We want to understand your businesses. We want to understand how we can support you. Look, we won't get everything right. I'll put that out there. We have made mistakes, just like any business, as we've tried to grapple our way through all of this uncertainty, dealing with huge structural upheaval in our operations and our demand. But our commitment is a very clear one. It's that we want to support UK PLC, and we want to support the 99% of businesses that are SMEs in the UK. And we can only do that by having conversations, building relationships, and understanding your plans. We've got lots and lots of online support hubs. The Brexit hub, as you can imagine, is well clicked on at the moment. Our Tomorrow Ready hub is talked, all the things that I've talked about today, and you'll find some of my articles on there if you're really sad and bored. And you know, perhaps someone thinks really important, customers in financial difficulty. This touches upon a lot of the things that we talked about warning signs, what contributes to financial difficulty, what are some of the things that you can do. But the most important thing I would say is pick the phone up. You know, if you're worrying about these things, pick the phone up to your accountants, pick the phone up to your business partners, pick the phone up to your peers, and pick the phone up to your bank. You know, we're all in this together. We're all at different stages within our journeys, and we're all faced with different challenges at different times. Fundamentally, we're all striving for the same thing, which is, you know, to get back to growth, to get back to optimism, and to look to the future with some confidence. So that is a whistle-stop tour in just over 45 minutes. So, Sandy, back to you.
Thank you very much for that, Gareth. That was very, very insightful. I really genuinely enjoyed that. I think partly helped by the fact that I don't have any small people running around the house, and I can have some peace and quiet without without trying to keep small people out of the room. But yeah, really genuinely enjoyed that, Gareth. Huge amount of information in there and a lot of very, very good points as well. I should have mentioned at the beginning to stick any questions, if you have any, in the Q&A box. I think there's a little chat box there. The webinar will be, it's been recorded, so we will put that on the Chamber website and the Chamber YouTube channel as well. So all of the links that you see in the current slide and the previous slides will be there for you to go and revisit and have a second look and more of a read into, if you fancy that as well. So yeah, if there is any questions, put them in the Q&A box. I've got a question for you, Gareth. Very quickly. Let's see, huge amount of information in there, a lot of really, really good points. You touched on it briefly, but where should people go to seek help on a lot of this stuff? I mean, obviously the bank is a good point, and accountants and lawyers. Is there any, you know, sort of, well, other resources or any software out there that's, I mean, people might be getting spreadsheet out, I don't know. Is there any tips that you've got there for who people should contact?
I think we're all spreadsheeted out, Sandy, that's for sure. Yeah, I mean, it's quite interesting because, you know, technology is playing a huge fact in this. There are lots of businesses that are solving for genuine problems that are coming out of, or sharpening as a result of the pandemic. So, you know, for example, how does a business control its expenses? There are businesses out there that are providing technology solutions that are focused around, you know, how do you better look at expense management within your business. There are businesses, again, from a technology standpoint, that are looking at ways in which, through things like APIs, you can create better means of taking payment from your clients or communicating with them in different ways. Google is an incredibly rich resource of information. It's also an absolute minefield. One of the things that I tend to do, which is probably a strange thing and more because I'm odd, is when I have a genuine business question that I'm grappling with, I do ask Google. And what I typically find is that you will see huge reams of companies that are solving for some of these problems. And I pick the phone up and I try and find out a bit more. I try and find out whether this is something that would benefit my clients, whether it would benefit our business, whether it will make a difference. And like I say, what really surprises me is that there's been a huge creation of new companies over the last year that are really focused on solving for a lot of the problems that are coming out of this. Visibility over cash flow is obviously one. You know, can I see what my cash flow is going to look like if I continue doing what I'm doing in the next 6 months? Will I need working capital? How much will I need? There's so many of these things now that are, you know, being solved for, and having a mindset of curiosity and just asking those questions is really important. But you're right. I mean, you've got your sort of your trio of trusted partners, if I can call them that, your accountant, your lawyers, and your bankers. and that's as good a place as any to start. We will try and connect people. So if we know of a business that is solving a particular problem that might help one of our clients, we'll put them together. That's probably one of the most powerful things that we as a bank can do. We support millions of businesses across the UK. How do we get you guys talking more to each other? Really important.
That's great. And I'll well, if anyone would or certainly wants to get in contact with Gareth, then either email myself, Sandy Kirkpatrick at tvchamber.co.uk, and I can certainly put you in touch, or better still, pick up the phone. I think it's I think in this sort of well, connected or disconnected world, speaking over the phone is always a bit of a refreshment, certainly in my eyes, to go back to the old school methods. There was one other thing I was going to mention as well, Gareth. I think a lot of the topics that you touched on earlier were focused really around change, and be it business change, economic change. As humans, we're naturally not, or we don't like change.
Yeah.
How would you encourage, or how would you suggest people to open up to change or become more adaptable to change? Any tip? I mean, that's a fairly big question.
Well,
but,
yeah, there is. Well, we're being forced to.
Yeah.
And I think that's what I found so fascinating about the last year. Change is being done to us, whether we like it or not, and the pace of change is accelerating. What I can talk to, what I talk to my team about on a daily basis, which is, and I alluded to earlier, having this curious mindset. I drive people mad because in so many ways I have the mind of my 3-year-old son, and that is that I ask why for absolutely everything. Why does this make sense? Well, what if? And when it comes to thinking about change, the curious mindset and asking the why are really, really important. Change is uncomfortable, and what we've gone through, where it's been repositioning the business model, or having to make the very difficult decisions about letting go of staff, or even if you're grappling with those decisions now, every day we are dealing with change. And what that does mean is that we have to be resilient. We have to be able to decompartmentalize, and we have to be adaptable. What's fascinating is that every business that I've spoken to has picked up those skills and traits, whether they've liked it or not. Now, what I hope, Sandy, is that what we will do is we will use all those learnings that we've gone through in the last year to innovate, to increase productivity, to think laterally, and to grow. I think there'll be a lot of people that will need a break, first of all, but then the real hope is that that culture of curiosity, that desire to innovate and to be entrepreneurial will continue. And incidentally, every business owner I talk to, they don't want to stand still. They know that the world is changing, and they know that we've got to change with it, or it will happen to us. I think sometimes it's just saying to yourself that you just got to take a step forward. You just got to do something. Standing still isn't an option, but doing something makes a difference.
I think it's also important to know, whilst it can be scary at times, it can be exciting, and there's a lot of room for opportunity in there as well. So whilst it might seem uncomfortable to start with, it can certainly be a force for good.
And sometimes you're right, Sandy, sometimes you won't necessarily see immediately the opportunity. All the great startups that I ever worked with set out to solve a problem. They didn't necessarily believe that they could get to where they got to, that the size of the prize would be what it was. But they had an idea, they were curious to explore it, and they were prepared to, tolerate the setbacks, the bumps along the journey. They had a vision. The vision wasn't, I want to float on the stock exchange, or I want to be a millionaire before I'm 50. The vision was, I want to solve problems to make a difference for a local community, to make a difference for consumers, to make a difference for businesses. And I think it's framing within that mindset so that you can go on the change journey. That's really important.
Yeah. And I think the articles that have come out with Deliveroo recently feed into that sentiment as well. And in fact, it's about solving problems. Thank you very much again, Gareth. If there's no other questions, I think we're nearly at the hour mark, so that's been absolutely fantastic. Thank you, I say to Gareth, but thank you to everyone who's come on the session this morning. I sincerely hope you found it useful. I certainly found it very, very interesting as well. As I say, the webinar will be recorded. It has been recorded, and it'll be up on the Chamber website and the YouTube channel, hopefully by the end of today. If there's any questions that you have, then please ping them to myself, and I can either forward them to Gareth or put you in touch. Just a quick shout out, we do have a webinar tomorrow with the European Space Agency, which is due to be a fantastic, really interesting one. Anyone who's involved in digital communications, AI, construction planning, then definitely one not to miss. They're looking into the importance of putting satellites in space and how that helps SMEs. So that's at 10 o'clock tomorrow. But without, I'll wrap it up just now, and thank you all very much for joining. Thank you, Gareth.
Thanks all. Thanks, Sandy. Take care, everyone.
Cheers.